So I've gotten asked a lot about these videos discussing needing 100 shares of Palantir and other stocks, and that's all that you need in order to retire rich. So I figured I would break this down and give you guys the actual truth about all that sort of stuff, give you the hard truth actually, the good and the bad, because there's both. And I'll give you an actual number of shares of Palantir I think you need in order to retire. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. All right, so let's kind of start with the flaws or kind of just the bads of the videos first off here. Then we'll jump over to the goods because there is some awesome stuff too. And we'll talk about exactly how many shares I think you need at Palantir in order to be able to retire and be very well off. And of course, there is one hard truth with all of this that you guys have to hear as well. I'll give that to you at the end. But let's start off with the flaws first because there's a lot to get into. So the first flaw is projections. Now, the projections on every single video that was sent to me were bad. Now, I'm not going to call it names. No, I'm not going to tell you who was good, who was bad. I'm not doing that. I'm not here to bash anybody. However, I am here to give you guys the truth. And whenever I looked at the projections that were in a lot of those videos, they were just bad. I'm sorry. You don't make projections based upon, well, if Palantir manages to increase revenue 30% per year, therefore the stock is going to increase 30% per year. That literally is not how it works at all. That you're not even understanding the basics of investing and fundamentals. I mean, what happens if they increase revenue by 30%, but EPS goes down during that time frame due to increased cost to increase that revenue? Guess what? The stock's not going up. It's probably going down instead, despite the revenues growing, because they're growing, but they're not doing it profitably. They're not bringing the profits along with it. So when you see these type videos, you see these type indicators out there, or these type projections, I guess is really what I should say. That is where you get yourself in trouble as an investor, because when they're not based upon solid fundamentals, it becomes really, they're just guesses. And on top of that, they're poorly developed guesses. So that right there is kind of the first piece. The second piece with these projections that I saw was some of them went out to 2040, 2050. Well, you can't even see past 2 years, much less to 2030, much less to 2040, much less to 2050. When you start seeing stuff like that, that is 100% pure fantasy. Nobody knows. Palantir may outperform every one of those projections. They might not even be around in that time frame. I'm not saying that I think that's actually going to be the case. Of course, I don't think that's going to be the case. But nobody freaking knows what's going to happen in the meantime, how those companies are going to develop, or anything else that goes on in regards to the stock market itself. So when I start seeing projections like that, and that justifies, well, you only need this little bitty right here, and you'll be really, really rich over here, they're strictly speculating and projecting, and it's just not realistic at all. So that's kind of the first flaw with all of them, is they were making kind of really just crazy projections out there overall that are pure speculation in most cases. Number two, they neglected any notion of valuation or due diligence. Now, to me, whenever you see these style videos and they just say, hey, look, just buy this and you'll be just fine. You'll be rich later on. Well, they're not telling you, well, you need to make sure that it fits your plan. You need to do the due diligence so that way you understand Palantir intimately. So that way, when Wall Street gets stupid, like they did whenever they beat it down to $7, you don't get scared out of your shares, but instead you're buying on the dip instead. If you're just randomly going, well, I'm just going to buy 100 shares and just let it go, see how it goes, that's not investing at all. And more importantly, you're going to get scared at some point in time because you have no idea what you own. You have no idea if you're overpaying or underpaying for those shares. And trust me, having 100 shares at a $7 cost basis is completely different than having 100 shares at a $100 cost basis. We're talking two completely different scenarios there. And those were never addressed in any of those videos, not doing your due diligence or your valuation on those particular companies. And that right there gets dangerous as an investor, because then you're just blindly following whatever the heck a YouTuber says. And that always, or almost always, ends in disaster. You've got to understand what you own, so that way you know the difference between opportunity and between hype and between what's really going on and between somebody's opinion on what's going on. All that happens when you put in that level of work, and they just basically neglected to mention that at all in any of those videos. Now, maybe it's in other videos, so I could have that partially wrong. It's not like I went through their entire library or anything like that, but it's definitely a point I would have brought up to at least put it out there that you need to understand these companies in order to own these companies in the first place. If you don't, start there, because I can make a case for Palantir being a great company for you to own, and I can also make a case for it being a terrible company for you to own based upon your due diligence, your plan, your risk tolerance, all kinds of, how old you are, all kinds of other things like that. So definitely make sure you do that. And number three, unintentionally encourages lottery investing. All right, so let me kind of define lottery investing here real quick for you guys. We all want, and we all would love to just buy $1,000 of a stock and have it go to the moon and make us a multimillionaire later on. Absolutely. Everybody wants that. But the problem is, I don't know anybody, and it's very, very rare for that to actually be how you make millions in the stock market. You make millions by consistently investing month in and month out, year in and year out. That's exactly what we're doing in my group right now with the $250 portfolio challenge. I'm up 82% this year on my buys in that challenge. And oh, by the way, I hadn't been doing it for the full year. I'm only 7 months into it, and we're already at an 82% return. But I'm going to continue to put money in consistently over the course of the next few years to show you that you can grow a portfolio into a 6-figure and then eventually a 7-figure portfolio by just being consistent. And that unintentionally, I'm not saying anybody was doing this intentionally, but unintentionally, that's not what these videos encourage. They encourage you to just buy this number of shares and it's just going to make you into a multimillionaire later, instead of, hey, buy Palantir because it's a great company, and every time it's on a dip, buy it. Or put it on a DCA for the next 10 years, and you're going to be a super happy investor because you own a lot of shares at a really great cost basis over the course of that 10-year period. That right there is proper investing. I know lots of stock market millionaires, a lot. And I don't know a single one, not one, that just put $1,000 in a stock and it turned into $1 million, or took $10,000 in a stock and it turned into $1 million. They may have a $10,000 investment that turned into millions later on. I have some stocks that have done that. However, it is not how they invested in general. They bought a lot of stocks along the way. They have lots of different winners that have won at various levels all the way through, but they have consistently invested throughout. It was not just a, hey, I threw money in 20 years ago and it turned into millions later, or 10 years ago, or whatever the case was. And of course, a lot of these folks were really, really aggressive with their projections. So you were just going to spend like $1,000 now, and by 2030, you're going to be a millionaire. I mean, possible, sure, likely, no, highly unlikely. And more importantly, that's not how you get wealthy with investing. It's also not trading and getting in and out and anything else like that. It's just basically consistently DCAing over a large period of time. That is the best way to win at investing, not just buying 100 shares of Palantir and kicking your feet up and thinking it may make you a millionaire one day. Might very well, hey, that'd be great. I own a lot more than 100 shares, so I'm going to be incredibly wealthy if that happens. However, that's not the most prudent decision, and that's definitely not the most likely scenario that's going to happen in regards to stock investing. All right, enough bashing here. Let's get to the awesome part next. Number one is the power of compounding. Now, the beauty of a lot of these things is they showed you the power of compounding. Basically, you don't need to trade. You don't need to take your profits and then try to jump back in and do this. They didn't do any of that in order to get that. Now, I agree, they put some crazy projections out there. However, if you just buy and hold, that's the reason why dead people beat traders, because you're just buying and holding. And they did encourage you to do that and just let compounding do its thing. Kind of think of compounding as the silent army of workers that are just making money for you while you do absolutely nothing. That's the beauty of compounding. Alex and that team over there are getting paid millions upon millions of dollars to grow the company, so that way the stock price grows along with it. You don't need to trade in and out and try to do more. They're getting paid millions to make you money in the end as an investor. So you got to kind of view it that way and understand that that is one of the beauties of what they're trying to show you, is you don't need to trade in and out. Hey, just let compounding take care of itself. Don't shake your profits. Hold on to it for a long period of time. I absolutely love that that's what they were kind of encouraging with those type videos. So it's definitely an awesome piece with those videos, and definitely the first one. Number two, goal setting. Although I don't necessarily agree with the premise of the videos, they were setting a goal, and that is key because so many folks invest without a goal in mind. I'll ask all the time in my group, out in real life, whenever we do live events, any other time, hey, what are your goals? And inevitably, people don't have them. I just want to be rich. What does that mean? That doesn't mean anything. Some people rich as $100,000. Some people rich as $100 million. Totally not relevant. What is your actual goal? And more importantly, whenever you have a tangible goal to reach for, you'll do things in order to hit that goal in the first place. So although I don't necessarily like the premise of the entire, idea of what these videos were about, they absolutely set a goal of shares to buy and to get to. And that right there is great as an investor, because now you have a goal of a number of shares to get to. And of course, you can just plug it into a return calculator in order to calculate out what sort of return you need in order to hit your goals. And of course, maybe you start thinking, well, maybe 100 shares isn't enough. Maybe I want 500 shares. Maybe I want more than that. And you start playing over the calculator. At least it already has you thinking about goals, number of shares to purchase in order to get yourself to your goal later on of whatever that end dollar amount is that you want to get to. So I love the fact that they absolutely were encouraging you to set a goal of number of shares in the first place, because that is one of the biggest, we're talking people who have been actively investing for a long time. A lot of times you get down to, hey, what's your goal? And the goal is, I don't know, A good question. Let me think about that. Some folks are actually already past their goal or what they would need or what they thought they wanted. But because they never set a goal, they're continuing to work and continue to do a lot of other things that, man, they thought they needed to do and they didn't need to do once we sat down and we actually did the math and we actually set goals. But that's great. So let's talk about the next big goal, which is how many shares of Palantir do you need in order to retire? Now, look, I know there are so many folks who are, just you want to retire. You're not necessarily on track anymore. You're trying to do it the old traditional way and it's just not working. You need some astronomical number to actually be able to retire. And it just seems like you're just constantly working and you can't get yourself there. That's exactly what the blacklist is for. It's not for folks who want to do traditional retirement. It is for folks who are looking for an alternative, especially folks that want to retire early or want to retire quickly. If you happen to be older and you're realizing, hey, I'm not going to make it to the 1 million or 3 million that I may need in order to retire. I need to make significant changes. If you're looking to do that, here's the details on that for those that are interested. And then we'll get down to the number of shares of Palantir you need in order to retire. All right, so how many shares of Palantir do you need to retire? Now, I'm going to use $300,000 as the dollar amount that I'm trying to hit in order for me to be able to retire on Palantir stock. Now, I hear a lot of you guys already telling me, hey, Luke, that's impossible. That can't be the number. But I'm telling you guys right now, in our blacklist, in our community there are folks that are retired on that small of an amount and they've been retired for a while. They do not need any more. The math is the math in the end. And if you kind of reframe what retirement is and you kind of look at other alternatives, it is absolutely possible in order for you to be able to be retired and not live on nothing. We're talking about live a great life using one of our core freedom alternatives that we have in the program there in order to live that way. So I understand that may not be right for everyone. Great. Whatever number you need, you can just basically take that number. Like let's say you think you need 1.2 million. Okay, we'll take the numbers we get here, multiply them times 4, and that right there is the number of shares you need. So whatever number of shares we come up with for Palantir, hey, just multiply it times 4. That's the number you need in order to hit your goal. But I'm just using this as a baseline there because I know we have folks that are living it and we have experts in that group that are absolutely doing it right now today and have been doing it on that amount. So I'm going to start right there. And then obviously you guys can extrapolate out wherever you need to in order to get to the number you think you need. All right. So here's the number right here I'm going to give you guys. And I believe this is a minimum to hit. Minimum in regards to, in my opinion, of course, in order to do that. Now, the minimum to me is 1,000 shares of Palantir. And let me kind of give you guys the math behind that. If I have 1,000 shares of Palantir and Palantir goes to $300, which is speculation, I cannot realistically project out that far, but let's say it goes to $300 per share, I am sitting on a $300,000 allotment of Palantir stock. That right there gets me to that $300,000 goal. So the math is pretty easy there. It's 1,000 shares, or basically right around a 5x from where we're at today is what you, so if you bought all your $1,000 shares today, we need a 5x from here in order to get ourselves there in the future. So is that possible? Absolutely, it's possible. But however, let me caveat this with the fact that what the time frame is, nobody knows, and I would be speculating on what that time frame would be. Because the unfortunate truth is, if I'm looking out, you can realistically project out a year, maybe 2 years. Now, of course, we'll get, next quarter, we'll get next year's guidance. So obviously the numbers all adjust based upon that, because I'm sure Alex will actually increase guidance from the time before. But just using what we have right now today, looking out realistically over the next couple of years, I can't see a realistic fair value now. The stock may go well above this. It may trade well below this. Nobody knows. But regards of fair value, getting up over $100 per share is starting to get stretched in terms of valuation based upon the numbers and the growth rates that we know right now today, okay? So that's the reason why I say I'm purely speculating with the 1,000 shares and getting to that $300 mark. And now you see exactly why people throw around these crazy price targets for Palantir, especially when they're talking about retiring rich and things of that nature, because the truth, honestly, kind of hurts. And everybody thinks they need $1 to $3 million in order to retire, long run. Now, I disagree with that. I think you can do it on significantly less, but nonetheless, I can't say that's not true because most people do believe that old traditional way of doing things. They absolutely believe in that old traditional way. And so that's the number they're trying to hit. And unfortunately, as a content creator, if I create a video basically saying you need 10,000 shares of Palantir in order to hit those marks, then you're not going to be very happy with me. You're not going to like it and subscribe and get all excited and, feel optimistic about the future and all sorts of things like that. But if I flip that 10,000 shares on its head and I say, hey, you only need 1,000 shares because I think Palantir is going to go to $1,000 per share later on. Therefore, you got your $1 million right there. No problem at all. Just get to that 1,000 share mark in regards to shares owned. Well, people like that a heck of a lot better. You're going to grow a better audience. People are going to be more excited. People are going to join your group and do all sorts of other things like that because they feel like you have some sort of insight in regards to what's going on there. So I completely understand why folks do that from a content creation standpoint. However, that is 100% pure speculation. This channel is about the truth without the hype, not the truth along with some speculation. And that's just the way I choose to do things here. So for me, if I'm going to speculate out a little bit long-term, like I did, showing you guys the 300,000 mark, you need 1,000 shares. If you're trying to hit 1 million, obviously that would be, 3,500 shares or so. But the only realistic way I can show you math that Palantir is going to turn you into a millionaire without having to speculate, the number is 10,000 shares. That's the honest truth in regards to Palantir. Again, I know it's not something they want to hear, but at 10,000 shares, we get to that $100 mark over the next couple of years, and you're there. Now, again, I understand that's not exactly realistic, but nonetheless, that is the math that I can do realistically in order to get ourselves there in regards to Palantir. Now, of course, most of us are looking to retire, much further than 2 years into the future, 5 years, maybe 10 years into the future there. That's the reason why I gave that 1,000 share mark there. But if you wanted to give me, or if you put a gun to my head and said, hey, you got to guarantee what's going to happen, or you got to be as close to a guarantee as possible, it's the 10,000 shares. I think I realistically could make the case there at that stage that I would feel pretty confident that you would hit the $1 million mark. So what is the hard truth about all this? Well, here's the hard truth and why these videos are so difficult for us as creators and for you guys as, viewers to get. The reality is share count is relative, guys. It is relative to your situation. I don't believe in subscribe to all in on one stock, all in on another stock, and all other silliness like that. I do believe not necessarily in total diversification either, but I do believe I have more than all your eggs in one basket. But share count is relative. I have folks where their entire portfolio, 50, 60% of the portfolio is Palantir because they have really high conviction in Palantir. Of course, it's run up to a lot during this stage. So they have a really, really high concentration and feeling around Palantir. I have other members that have, 5 to 10% in Palantir because they don't have as high conviction. They have higher conviction in other stocks that are out there. It's not like a one stock to rule them all. There's lots of great stocks, so they feel confident in other stocks. And yet we have other members to where they only have 20% of their portfolio into growth because the other 80% is dividends because they're retired and they want to live off those dividends. So there's 20% is just kind of what they do for capital appreciation, for fun, obviously to maybe leave something for the grandkids, something of that nature. So they have a very, very small amount of Palantir compared to the rest of their portfolio because that's their goals. Their goals are income. Their goals are not what's going on with Palantir and trying to grow it into a multi-million-dollar portfolio with Palantir stock. Their goals are very, very different. So share count is 100% relative, also relative to your income, right? I mean, there's some folks, 10,000 shares is no big deal because they got an $80 million portfolio. So, they have 100,000 shares and it still wouldn't be that big of a deal to them because of the size of their portfolio. And then there's other folks where 100 shares is a lot of shares. It is relative to your situation. There is no right or wrong answer with this. It's the right answer for you and your situation. And make sure you keep that in mind whenever you're hearing these projections or people are commenting down below with the number of shares they have. Don't get discouraged. Their situation is different. Their plan is different. You may be 20 brand new and they may be 60 and been investing for a long time. And they may be, at the end of their career with a very, very high income. You're at the very beginning of your career where your income's a lot lower. All those things factor into what your share count will be in the end and what's appropriate for you as a share count for now. There is no right or wrong answer. There is no predetermined best, number you should have. And there's no predetermined percentage that it should make up of your portfolio. That should all be based upon your plan, your risk tolerance, and how Palantir fits into all that. And of course, remember, don't punish your winners because it runs. Hey, great. I'm not going to punish them. I'm not going to trim them. I'm not going to do any of those sorts of things. So kind of keep that in mind. Keep that share count in mind and run your own race in the end. And if you want to learn how to do a valuation on Palantir, do your due diligence on Palantir, see all my balance analytics on Palantir and my price targets and everything else involved, make sure you check out the pinned comment. I may have left something special down there along with the blacklist there. Obviously, we got special founders pricing there for that. But for you guys right here, there might very well be something special for those that just want to join the stock group. Check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.